Welcome to the Trader Merlin Show with your host, Merlin Rothfeld.
Hello everybody, welcome to the Trader Merlin Show. Happy St. Patrick's Day. Hopefully you got the luck of the Irish and a pot of gold after some of these market movements out there today. Some wild stuff, actually some great options plays as well. We've been talking with some of my colleagues about the options trades on United Airlines, which will be a very interesting topic of discussion. Maybe we'll do that on the Thursday show where I just focus on the selling of premium and what those rates of return might turn out to be. I'm going to do this real quick so we can not keep our guest waiting, who's in the wings right now. He'll be on Skype just discussing some of the Forex markets. As you guys know, Sam Evans will be our guest today. We're going to do two kind of things with Sam here. Number one is we're going to start with the profile. So we'll start off with an instructor profile so you kind of understand who Sam is, what his preferences are with regards to trading long-term, short-term, maybe even his preferred investment vehicles. So I guess I'll start right there. TJ's got me all set up and ready to go, so we can start with that one. Let's go over to Sam. I don't even know where he's at today, but Sam is on the road somewhere. We have Sam Evans joining us today. Sam, how you doing?
I'm good. How are you doing, my friend?
I'm absolutely fantastic. I couldn't be better.
I'm not on the road, man. I'm holed up in my basement, quarantining myself. That's what I'm doing right now.
So you guys mind, it's always kind of a little puzzle when you look at Sam's house or when he's on Skype, because he always has a little thing of Superman somewhere around. Where's Superman hiding today? Don't you have?
All right, you ready? Are you ready for like a moving camera?
Oh, we go. Don't motion sickness for everybody. Let's do it.
There's one there.
Oh, there he is. Yep. Like that.
And then on the wall here, like we got the whole Batman thing.
That's
going
nice.
on.
I like that.
You like that?
That's a good one.
Yeah, we've even got Cap Shield in the background as well. Yeah, you can tell.
And you've got the glove of who's the guy?
Come on, we'll go for a walk. Let's go for a walk.
The life of a Forex trader right now. You guys wanted a profile?
This is it. Look,
this is about as raw as you're going to get.
This is the real valuables. Yeah. Let's go. Thanos' gauntlet. Here we go. Ready? It's all here. Look at that.
I thought you were a geek before, Sam, but now you have just gone above and beyond geekiness. I love it.
Don't be afraid of who you are, right?
No, own it, embrace it, and be yourself. All right, we'll try to keep things stationary from now on out. All right. Just because it's a new program with Trader Merlin, I know in the past we've done a profile of you. In kind of a nutshell, walk our viewers through, because I know some people might see you on social media. You might see Sam in other classes as well. But tell listeners a little bit about your background, why you chose Forex, and maybe what's your style of trading in the currency markets?
Cool, yeah. I mean, I have to kind of rebio myself now after that intro, don't I, with my nerdiness.
I love it. One day we'll do the camera from my house too. So.
Oh, I know, right? So, 17 years active in the market now, and just for me, my background was I used to be in the media business. I used to be a film and music promoter, and worked in the radio industry. So as far away from the world of financial trading and as you could possibly get back in London, where I'm originally from. I now live in Philadelphia. So for me, when I got into this, I got to say, the reason I got into the markets was it was an insurance policy, if anything else. It's a very fickle industry, the media industry, and through no fault of my own, kind of fell out of the industry, wanted something I could always do, that I could always have, and I had no interest in day trading back then. I wanted to do other things, and I liked the idea of setting up trades around the clock, letting them happen in the background, and going from there. So I found when I started as well, it didn't have like a whole ton of money, and I wanted to invest in the US markets, but obviously, it was to be a pattern day trader, as you got the $25,000 minimum balance. And I was like a little bit under that. And then I found very quickly, the world of Forex. And I was like, wow, this is cool. I've got leverage, more flexibility, 24 hours around the clock. And I was really nervous of gaps, Merlin. I'd read horror stories about gaps in the equities market back then. And I was working with small money. So I was like, this seems really good for me. And that's kind of that's where it started for me, was the Forex market. And I liked the safety of it, the flexibility of it. And then as soon as my passion for the market grew, I started to get into futures. And, it was a natural fit for me to get into futures, because when I first started, Merlin, it was just standard lots in Forex.
Right.
So you didn't have mini lots, you didn't have micro lots. Minis came out a few years later. So I made a transition into doing, futures and Forex. So now I do options and I do everything.
Sure.
But it all started with Forex, and more for the flexibility and the safety
Right,
time
and I'm sure the leverage was a factor as well. So for the viewers that don't know, Forex markets, currency markets in particular, offer you some of the highest leverage that you can get out there with any asset class. One of the things that Sam mentioned there, which I think is noteworthy, was the 24-hour tradability of them. You know, when you trade the equity markets, you've seen it recently. You know, it'll close at one price and opens at a dramatically different price, and for the most part, you're stuck with that gap. It's either going in your favor or against you, and that's an uncertainty a lot of people don't like. We can circumvent that by looking at maybe the futures markets and, of course, Forex. Sam, what would you say your style is? Are you longer term, shorter term? Doesn't matter?
Now I'm everything. I actually trade every day. I trade typically, I'm on the East Coast, so I look literally to trade between about 9:30 and 11. And when I say trade, I'm not sitting there clicking buttons, but, you know, looking for setups around there. My mantra is pretty much if by noon I'm not having a good day, it's probably best to quit. You know, I either do pretty good in the first couple of hours of the day or I don't. So, and I have a 2-year-old, so you know he takes up a lot of my time. So yeah, 9:30 to kind of 11ish generally in the morning, trading things like the S&P 500 and the Nasdaq. Right now with the volatility being what it is, more of an S&P guy, and then I'll kind of like scan for some options things that I'll do a couple of times a week, and I'll do them sometimes analysis at the weekend or in the evenings, and then at the same time I try to find about 15-20 minutes a day to do my Forex stuff, you know. And I always try to look at Forex on a Sunday as well, before the open, you know, at 5 p.m. Eastern to see, because a lot of the good trades set up on that on the Sunday, right? And they can be the great ones. So if I could find maybe a couple of setups there, I've got, I don't want to say lazy, but I've got more efficient in that I've got, you know, very specific things I look for. And if there's 3 setups, I'll just put those trades out there and try and be as hands-off with them as possible and leave my active stuff to the futures market. Don't
be afraid to say it. I have admitted on this program many times, I'm lazy in many aspects. I just don't want to I don't want to do a bunch of excessive work. And I look at trading as kind of this, you have this spectrum. And a lot of people feel like you have to be 24 hours a day, 7 days a week, putting in effort. I think that's a fallacy. There's a point of diminishing returns for me where I could put in another 30% more effort, but it might only increase my rate of return by 1%. Well, you know what? I'm going to keep that time for myself. So we find our comfort zones and we stick with it.
We really do. I've actually found that I've done better by spending less time at the screen, you know, trusting targets. That's a big one that traders have to overcome. You know, really learn to trust the trade, trust the targets, not micromanaging it. And you know, generally, I think I've cost myself a lot more money in not stop outs, but in potential profits by over managing trades when I should have just left them alone. You know, but you learn that, right?
Absolutely. Going back to kind of profile things, you know, one of the unique characteristics of Forex is this 24-hour market. And you mentioned that you're really looking between 9:30 and 11. So you have like an hour and a half window right there. What made you choose just that opening of the U.S. markets versus maybe the opening of other international markets or maybe other times of the day?
I think more just because it suits me, my time zone now. I mean, it really, back when I lived in England, I'd be looking at the market at about 8 a.m. London time, which is 3 a.m. Eastern, because I was up. And then that's kind of, again, the beauty of it. There's no real reason. I'm not going to say, oh, it's a better time to trade. It just suits my lifestyle. And it gets back to the point I was making before. I tried when I got into Forex to make it fit my lifestyle, Merlin. And so, like, I was like, when I moved over here, my wife was like, so are you going to be getting up at like 3 in the morning to like look at Forex? I went, God, no. No way am I doing that, because she was used to me being at the screens at 8 a.m., right? When we were in London. So it's more, I mean, I do like that time. I think in the US hours, that first window is, you know, you've got the back end of London, you know, coming in, you know, the European session is closing, and, you know, you'll know that, you know, some of the busiest times in the Forex market when you get those overlaps between Asia, you know, Europe, US and so on. So it's a good time for anybody who's looking at it. But I mean, the great thing is if I was working night shifts and had something else going on in my life, then I'd probably be looking at about 4 in the morning, right? Yeah. So I fitted it into what works for me, buddy. That's really all it is.
And I think it's definitely a matter of personal preference. I was just asking because, you know, as we profile, a lot of people, and this is why I want to make sure we profile everybody, is because somebody might see let's say what a Brandon Wendell does, or what a Sam Seiden does, or you do, and say, I have to mimic that because that's what I want to do. I think it's important that everybody understands that it was a discovery process for Sam to get to where he's at, Sam Evans to get to where he's at, as far as finding what he's trading and how he trades that. For somebody that's just starting out, getting into the Forex space, what would you say are some things they might want to pay close attention to help them discover what their style is and maybe avoid undue risks?
Okay. I would say to them to find their style. One of the good things, I mean, again, you don't want to make it too complicated, but
Right.
you know, one of the things to always be aware of is the speed. I mean, momentum. You know, you take currency pairs, you know, like the euro dollar, the euro versus the GBP, dollar Canadian. You know, they're more gentle moving markets. You take a pound New Zealand, it's the complete opposite. And I think that, you know, people not always set up for that. So take the time to learn about that. Hey, yeah, all things go up and down, but the speed at which they move can really kind of unnerve some people. And I don't think they're prepared for that.
Yeah.
So, you know, take the time to scan through the market and find a pace that's right for you. Some people like driving fast, some people like driving slow. What I'd also try to always say to people is to find their rhythm is, you know, don't get caught up in thinking that you've got to check every single piece of news all the time. Well, I think one of the biggest myths in the currency market is that people say, oh, well, everybody gets the information at the same time. It's fair. You know what? The market will always be unfair if you don't have a plan. It will always be unfair if you don't manage risk. It will always be unfair if you don't know what you're doing.
Right.
You know, the way you level the playing field is by building yourself an edge, by being smart, by having a plan, by having a set of rules. And I truly believe this. Any trading strategy that's well thought out, well tested can work. And I know so many traders like you, Merlin, who've all got different styles and they've all had success. They've all had ups, they've all had downs. They trade very different ways.
Yep.
So, you know, there's no one strategy is better than any other strategy. So I think, you know, like I say, my style in Forex is very much, you know, longer term moves. I'm not into 3-to-1 risk to reward ratios. You know, I'm looking for things that have potentially like 8, 9, 10 and plus to 1, which means I'll probably get more stop outs. But man, if I get the good trades, they'll run. And I like to use Forex for that, to catch a good move, leave it be, let it open, let it breathe, rather than going more higher frequency and getting those 3-to-1 trades back and forth, back and forth, back and forth. I think Forex takes its time. I mean, right now everything's kind of on steroids, right? With what's going on. But generally, I find the Forex market a little bit gentler than the equities market, personally, especially over the last couple of years, definitely. So, you know, again, it's very important to go at a pace that's comfortable for you, have a plan that's easy for you to follow, and don't get caught up in all the noise out there, you know, because everybody's got an opinion. And an opinion's a really dangerous thing to have in the marketplace.
Absolutely. And you know, you mentioned have a plan in place. I'm going to say this just kind of, we're in this environment right now where obviously people are developing their plan to deal with this whole coronavirus and how do we stay in our house for 3 weeks or a month. In trading, it's rather similar. Most people's plan is about how am I going to make money. The more important part above and beyond that is what's your plan to get out if you're wrong and what that kind of damage mode control that you're going to do is. Now, keep in mind, Sam Evans mentioned that there is a million different strategies out there. You can use any one of them, and I agree with Sam. I do believe that any one of those can be successful. What you have to do is take it at face value. If you are taking anybody's strategy or anybody's courses, make sure that when you take that strategy and you are working it and making it fit to you, that you are always checking, finding out what's working, what's not working. If you don't understand what's working or not working, you need to study and figure that out. And that's part of the course, you know, the stuff that Sam and I have been teaching for years is, here is a basic strategy. Here is how it's supposed to work. If it's not working, check this, then check this, then check this. And normally those mistakes are identifiable right away, and we can tweak those a little bit to fit us. We all have different personality types as well. For those of you starting out right now, this is kind of like going, if you've ever been to Space Ibiza, which is it used to be one of the wildest clubs out there. The markets right now are like walking into Space Ibiza at 2 o'clock in the morning. It's crazy mayhem with people swinging from chandeliers, fog machines, and it's just an absolute shit show. The normal markets over the past, let's say from 2009 to 2016, 17, were like going into Space Ibiza at like, let's say 10 o'clock at night. It's super chill. Everyone's still, it's normal, it's orderly, there's no chaos. You're walking in right now to a market that is absolutely gangbusters nuts. And I would say be extremely, would you agree?
Oh, man, I would not want to be a beginner right now. I can tell you that right now. I've been tweeting lately, you know, about certain things and just saying, the best advice I can give you is stay out now. I mean, as a futures day trader, I've had to completely change the products I'm trading. You know, I've traded the NASDAQ, you know, every day pretty much for a decade. And I'm like, I can't trade that thing at the moment, the way it's moving. And I've always found the S&P 500 were really slow and dull. Right now, oh, this thing's beautiful. You know? So you have to adapt. But these are on. Look, you've been through. You've been trading longer than me. Still, I've traded through the credit crunch. I've traded through all of that. This is like not next level stuff, right? the way it is at the moment. So
and you got to love it. I mean, you see a market move 10% up one day and then 11% down the next day. These are not normal markets. Enjoy it, but be very careful out there. Let's go and look at some listener questions. I had Beata, who's on our Facebook. She was on Facebook earlier asking us to discuss the Aussie dollar, AUD USD.
Aussie dollar.
Now, while we pull these charts up, I just want to read something to everybody, just so you understand. When I talked about going into space Ibiza at 2 or 3 o'clock in the morning, unless you've been there, that analogy made absolutely no sense. But you're walking into an environment that's chaotic, and I'll tell you why it's chaotic. You go back to 2 weeks ago, United States cut 25 basis points, surprised the Fed funds rate. The next day, Canada dropped theirs by 50 basis points. The next day, British pound dropped theirs by 50 basis points. The next week, New Zealand by 50, and then the U.S. with a full 100 basis points cut. You're seeing currencies, which money makes the world go round, around the world slashing their interest rates. So the global currency war right now is basically these central banks standing around with machine guns shooting at each other. We'll see how it all pans out. But what it has done is created unbelievable moves in the Forex market. Let's start off with AUD USD. TJ's got that chart up here for us. I'll let you start off with this one. If you have a specific time frame you want me to look at, let me know. I have it on a daily right now.
Yeah, I mean, I gotta say, I'm right out on the monthly at the moment.
Okay, we'll go
because
to the
that's
monthly,
where
TJ.
I need to go. I need to see as much information as I can. So, in the live trading rooms I've been working in over the last, number of years and so on, I've been nothing but bearish on this pair. I mean, it's easy to say after the fact, but some of my listeners who've been in those rooms will know, because I've just not seen any real, buying activity. I didn't see any real good solid buying activity until about where we are right now, believe it, at 0.6, which is where we are at the moment. But, what's interesting normally right now in the conditions that we're in, I would be saying, this is a great great place to buy. And I think, would I take this do I see a bounce coming, a little bit of a short covering rally on this as well? Yeah, but on this thing, I'm liking this a little bit lower. Now, I'm liking this more around the 0.586s. About 0.58, about 0.58, 0.59 right now. I'm seeing that because I think there's a lot of people who are going to be like trying to pile into this thing at 0.6, big round number. And here's the thing. We are in unprecedented times. It feels to me like the rules have gone out the window, Merlin. All the calm technical heads. This is fear-based, literally flight to quality, dump the Aussie, get into the dollar. Not that I'm saying the dollar's so much better right now. There's no decent currency out there. But my point is, when you've got a very emotional kind of move like this, I don't see any real kind of, I wouldn't even be taking a stab at this till about 0.58. And then I got to say, if that doesn't hold, this is not even, I wouldn't even be surprised to see this go to 50 cents against the dollar right now, with the trend being what it is. And the reason for that is, you look at the monthly chart right now and you're just seeing consistent new areas where new sellers keep coming on board. You've got a ton of sellers around 0.7. You've got a ton of sellers just before 0.5, before 0.75, a ton of sellers at 0.8. All I'm seeing is a massive commitment to this trend right now. So I got to say, 0.585, that's my key area. That doesn't hold. Don't be surprised to see this thing drop lower right now. I think and it's been in a downtrend for a long time right now. I've not even seen any sign of reversal. Yeah,
I mean, you had the 2006 to 2018, but I mean, you look at the overall trend, Beata and others that are looking at the Aussie, it's ugly and it's down. I agree with Sam. I actually think the 56 mark is a pretty attractive one. But at this point, I'm really not looking to buy it. I'd rather short a strong rally. So if you see a nice surge up in the Aussie dollar into an area of supply, short it. This is what we've been saying with the U.S. equity markets is the exact opposite, which is buy the dips. This is short the rallies.
And I would certainly not say go shorting it right now. Like you said, a good healthy trend needs a correction to be able to jump on it. So there's a nice of around 0.65, 0.66, I think is a good point to wait if you can be patient. And then, for this trend to continue, it's going to need a rally. So that could be a great selling opportunity around 0.65, 0.66.
Let's see. TJ says he's got a question for us. What you got, TJ?
Gayer has a question. He asks, any advice on holding on to a trade in the positive? He bought EURUSD at 1.09705 at 1021 and got out at 1.09845 at 1055.
Okay.
So he says, how do you hold on to a positive trade?
Did you hear that, Sam? I don't know if
I didn't. Okay. I didn't hear it.
I wasn't sure if my microphone's coming through. Basically, it sounds like one of our viewers, Gayer, was on the EURUSD, so you can check out EURUSD.
Got it.
And he was in at 109.705. So I'm going to have TJ try to map that one out at 109.705. And I believe what happened is Gaillard was in a nice positive trade. He's doing well, making some money, and maybe just jumped ship a little bit too quick. So let's go on an intraday basis here. Go to maybe a 5-minute. Okay, so there is the 105 mark, and then let's see, and he got out at 109.845. So you made yourself 40 pips, not too shabby. But if you look at the grand scheme of things here, as TJ's mapping it out. You just got a little bit there. Wow. It seems like you could have made a lot more there, Gaillard. Let me see. You said it 10.42. So my guess is you were buying. I'm assuming it was on this big green candle that came out here, this breakout candle. I'm not 100% sure, but I'm assuming that's where that trade was taken. So I guess maybe the question would be, if he did buy right where kind of TJ is messing with his cursor, let's say it's 11.15 is what I see here at on today's trading. Had a nice breakout trade, broke above some highs, and now you're in a momentum run. What would you do to maybe maximize that rate of return or keep it? Because I don't know whether he let it rally all the way up to, it looks like it went up to 110 and then came back down and maybe stopped him out, or... So how would you go about managing a trade once you got a nice runner on, it's doing what you thought, you're finally in that trade, you got your stop loss and it's rallying. What would you do from a management perspective?
I mean, for me, I think there's one or two ways to... great subject. I mean, I could probably spend hours talking with you about trade management.
Our viewers would love that.
I mean, it's literally... Trade management, to me, I've always told my students over the years, I've taught over probably 50,000 people now, and I've always said the time to really take ownership of your plan is to spend time on the trade management. Yeah. Because there are so many ways to do it. I think you have to have a very... There has to be literally, one of three approaches. There has to be the approach of, whatever is the reason I got in, there has to be a solid reason to get out. Now, for me, if I got a solid buy setup, I always want to look for a solid sell setup. If I've got a solid sell setup, I want to also have a solid buy setup. I get into a trade and I say, hey, man, let's say I wasn't long on this market right now. Let's say I wasn't a buyer on this market. Where would I want to sell it? Then that should be your final target, right? If you truly believe in that. That's the first step. The second step is, go test just working on a fixed profit target of like a 3-to-1 or a 5-to-1 and say, hey, I'll take what the market gives me as long as it's 3 times my risk. And, again, test that out and not worry about it. Because I've said to people over the years, if you can be consistent taking 5-to-1 trades and accepting you're going to miss out on 8-to-1s and 10-to-1s, but at the end of the day, you're consistent, who cares, right? You've got to have a plan to give you that. The third is, you let it off the leash, as I call it. You let it run. You say, hey, I'm going to take this, and if I'm in a buy, as the market's making new highs, higher highs, and if for every higher high and higher low it's put in, bring my stop under consecutive higher lows, or as it's making lower highs in a downtrend, bring my stop above and let the market stop you out. So from where our friend was buying earlier on, we can see that like around 0.098 right now, it kind of had a bit of a base in consolidation. It looks to me like it's trying to do an inverse head and shoulders here to a degree on like these charts. And I see some upside to around the 1.11. So you've got to make the decision, say, hey, I'm going to lock in under the key lows, which is around the 1.98, and let the thing run. I'd only let it run up to about, 1.11 for a final target on that. But you have to have that plan in place before you can put the trade on, right? Right. You have to. You can't move the goalposts on it. So
yeah, I agree 100%. And I'm looking at this one, and I'm not exactly 100% sure, Gaillard, where the buy point was for you. But if I'm seeing correctly, and this big green candle got you in at some point, my obvious target would be looking at this spike from earlier in the morning. If I'm a day trader, and of course, if you were looking to go long at you were at 99.48, and all of a sudden you jumped up to 110 mark. I disagree with Sam a little bit, and this is just a matter of personal preference. It's just trading style thing. Sam says, he's got his target in, he's going to sell all out there. I don't. I would, if I had, let's say, 100,000 of the EURUSD and on this break, I would sell half of it once it reached that 110 mark, and because the momentum looks so strong, and we've seen this market lately where once it gets running, it just seems to have ballistic moves. And in the past, I've missed out on some colossal moves by doing what Sam said, which is selling all out. Nothing wrong with that, because what Sam's doing is a great thing. He's locking in profits and making sure that he gets what he wanted out of the trade. I could very easily have been susceptible to this move where it broke above, got me thinking things are going to go great, and all of a sudden came ripping back down, and I may have made a little bit less than Sam on that trade. But if this one kept ripping and kept on going to, let's say, the 111, 112, then I'm the one who's making more. So it's a preferential strategy or tactic that you have to implement yourself, and there's no right way about it or wrong way about it. It just has to be what fits your trading style.
It's so true. Anything that can make you consistent, right?
Yep.
Because I used to scale out and take partial profits, and then it'd drive me mad because I'd be like, I wish I was running the whole thing, you know? So I got to this kind of all or nothing, if you like, mentality, where as I started to trust my targets more, I'd leave them on a little bit more. I do take action though on those trades. Like my plan that's worked for me is my strategy is I know where I'm getting in, I know where I'm getting out. The charts, the way I look for the key turning points has always helped me define where I'm getting in and out, and I'll manage between those areas. But again, I've tested it enough to know that it works. So yeah, while sometimes I might have been able to run it further, you know, and sometimes I took a profit too early, and then other times I've got the good one. The key thing is I test my results. I go back over and go, hey, have I got stronger average wins to average losses? Is it allowing me a profitable scenario? And then I'll stick with that. Because like we always say, I agree with you so much, Merlin. You know, two traders can have completely different trade management styles, but it doesn't mean they're both going to not be profitable, right? It doesn't mean that. So in fact, one of my very first mentors trades completely different to me. Like it makes me uncomfortable the way he manages trades. Yeah, you know, he's had success and I've had success. So, you know, no one's right or wrong, just the market.
TJ's waving at me. TJ, what do you got for us over there? You got any new ones coming in?
Yeah, Siraj wants to look into the CAD.
Okay.
And Anthony says the Euro USD looks ready for a breakout to the downside. All
right, we'll do those two right now. Hey, Sam, you still there?
I am.
All right, perfect. Let's look at the USDCAD. Siraj was asking and just said, can we take a look at the CAD as it's coming into seasonal buy? When you look at the USDCAD here, folks, for those that might be watching or listening on the podcast, I'm just going to explain to you what's happened since 2020. The Canadian dollar was really, for the better part of 2019, traversing sideways with a very slightly downward bias. But then 2020 started. We opened 2020 on the low, right? For 2019, it finished on the low. And then all of a sudden, it's gone from about 129.55 to right now we peaked out at about 142.77. Yeah. I mean, this is a huge move up in the USD CAD, which of course is showing the strength of the US dollar versus the Canadian dollar. And I just wanted to paint that picture for the viewers or the listeners who can't see the show. What's your take on the USD CAD here?
I mean, unless oil starts to recover, you're going to just see this thing carrying on this way. You know, this has got a very strong link to the oil market, right? And as you've seen, you know, what in the chart that you're seeing, the dollar strengthening, the Canadian dollar weakening there. We've had weakness. And, you know, you mentioned a lot of the chop that we had. We had a lot of chop and range-bound action in the oil market, didn't we, all through last year as well? And, you know, it had those times it looked like it was going to re-challenge high, and then it didn't. And then obviously with the whole trade wars and with the sell-off in oil that we've seen, no surprises over the last week and, you know, last few days, that weakness in oil has pushed a massive weakness on the Canadian dollar as well. There's always been that strong fundamental link between the two. Right. All I'm seeing right now on the charts is I'm not seeing any real selling pressure coming into this market, Merlin, until we get to around 147. Yeah. And even at 147, to me, it's just a wick. You know, to be bold on here, I'm looking at 1.5. I'm looking at that big round number. Wow. I'm seeing an old support level at 1.5. I'm seeing a lot of traders, your resistance guys, are going to be looking at as a big previous support area. You're also going to be seeing like other guys who like to look at the supply and demand methodology in there. So a good pocket of supply around that area. I think this has got 1.5 written all over it right now. No real selling action till there. And oil again, I'm not seeing a bottom on oil at the moment, really. So
which is crazy to say.
There's a lot of forces there driving each other.
Absolutely. It's crazy to say that because you guys look at this oil chart right here. Oil today is at $26.72. So again, the U.S. oil producers are done. They're bankrupt. They're going to be going out of business here in droves soon unless oil gets back up above 37. Let's see. The other comment that was coming in was from, what was it, Anthony? Yes, Anthony. Two things from Anthony. He says, plan your plan, test your plan, 30 to 50 trades at minimum before using real money. Absolutely. And even once you're live with real money, you're always going to want to keep monitoring your plan, seeing what's working, because what you'll notice is everything works until it doesn't, and even the most perfect trading plan and strategy will all of a sudden stop working or be less efficient than it was. We have to modify and tweak things. Anthony's comment here was about the Euro USD. Looks like it's ready for a breakout to the downside. EURUSD is the one he's looking at. And I'm assuming you're looking at longer term time frame here, Anthony, or is that shorter term? It'll take him a while. There's a nice lag time. But the daily, you guys can see EURUSD. It doesn't look like a breakout to the downside. It looks like just extreme volatility. My assumption would be he was looking at this 5-minute chart, which we were analyzing earlier. TJ drew some lines on this one, which doesn't really show the breakout to the downside, Anthony. It looks more like a symmetrical triangle where we're making lower highs and higher lows right now, which is a sign of compression. Generally, that ends up being a breakout in the direction of the previous trend, which most likely would be to the upside here. All right, there we go. Let's see. I got one more. We're supposed to wrap up right now, but I've got two people asking. Euro British pound. All right, we've got the whole darn Brexit thing going. Look up EURGBP. And
EURGBP.
Yeah, gotta love that one.
One of the most boring currency pairs I've ever traded.
Yeah.
Do you know what? It's just one of those ones. But during the boring's not a bad thing right now, though.
Well, not this move. I mean, this move is pretty friggin' amazing. But
I haven't seen it move that much for 20 years. Oh my gosh! Wow, look at that thing. With this one here, now this is a market I feel more comfortable getting ready to get short on, actually, based on it, because I've got some good established highs there as well.
Yeah. You're coming right into some supply levels,
in the same boat. I mean, I know Europe's and Britain are now separate things, finally, after all this. But let's just take a look at the charts that I can see. Yeah, I mean, you've got a beautiful rally that you've seen in here, but man, what a ton of selling pressure on there. And the previous big sell-off from 0.93 did create, a beautiful move to the downside with new lows. I got to say, if I can narrow this down just a little bit, looking at the charts that I can see on here, again, and I'm always going to go to the absolute extremities with these market conditions being what they are. But I'm going to say from about 0.92, about 0.925, so yeah, 0.9250, from around there, with looking to protect myself over the highs of 0.93. I think there's a great selling opportunity there. I really do. I think, and especially with the move to the upside that we've seen.
Sure. I think we could actually be in the midst of one right now. I would be more of a confirmation type of trader here and waiting for this rollover. But these moves are parabolic, and generally what you have there is just a total greed-driven event. Of course, we know that there's some news driving it here with some of the rate cuts that have happened. But I would wait for this little rollover. If it starts to make some new lows, I think you might have a shorting opportunity. But be careful out there. This one has been a ripper for the past month. Pretty impressive. There's another Forex question, but I'm running the show way too long, and I was told I have to keep the show at 30 minutes. One last question came in from Sam, and of course, you guys are all welcome to send in questions and feedback anytime, 24 hours a day, 7 days a week by going to tradermerlin.com. You can just click the little button there and send me messages and comments like Sam did. Not Sam Evans, who was our guest, but another Sam. He says, and this is an interesting one, if the U.S. market starts to ban short selling like some Asian markets, what's going to happen to my long puts? So basically, Sam has bought some puts here. He's thinking prices are going to go down. Now, all of a sudden, regulators could come in like they did in 2008 and say, we are going to ban short selling. What do you think is going to happen there? How would that work, Sam?
Ban short selling. Well, here's the thing. Banning short selling ain't going to stop the market going down.
Nope.
Right? At the end of the day, it's a simple fact. If there's enough people willing to sell and there's not enough buyers at that price, if the bids just drop off, and let's face it, if the fear grips in here, no one wants to buy anything, short selling can be banned. Remember, short selling is the process of borrowing something you don't own and selling it to somebody else. And, short selling is something that's not actually been available to the public in the UK for years, and markets still go down. I think people make the mistake of thinking that markets go down because everybody's selling. Markets go down because no one's willing to buy it.
Right.
So many people are trying to sell it at a point and there are no bids coming in at that point. So, I mean, do I see that happening in this great country, freedom and banning? I don't see it happening. But again, who knows? But at the end of the day, the buyers have to be there to support price. If the buyers aren't willing to step in and support price, it doesn't matter even if your public couldn't short sell. Right. The market's going to go down if the bids aren't there.
Right.
And so, that's just the dynamics of the market. So, look at it like this way. When an IPO comes out, the first 30 days of an IPO, public can't short sell it, but it didn't stop Uber going down, did it?
No. And I'll real quickly as we wrap up here and show you guys a picture. Let's go out to the S&P 500. We'll drop this up to, let's try to see if we can get it onto a weekly basis, and I'll show you guys back in 2008 what this looked like. In September of 2008, the U.S. put short selling bans on specific U.S. equity. I think it may have actually been all, but I think it started with financials. Notice here is September. It started September 19th. And you'll see that what happened, the market plummeted from there. The S&P, when they put these rules in place, let's go to September 19th, TJ. There you go. They put these rules in place. The S&P was trading at 1,218. 2 weeks later, after they put those no short selling rules in, we were at 874. That's it's over a 300-point drop in the S&P. Now, of course, that seems like nothing compared to the moves we've had over the past couple weeks. But bottom line is, it dropped all the way down to 666 with no short selling allowed. So basically what this does is it instills fear in the public that basically they're saying, whoever the regulators are feel that this market is going to hell in a handbasket. They're trying to stop it. I'm just going to get out. I think that you should stay long your puts. Keep them there. You might get a little bit of pop if they do decide to ban short selling, but bottom line, it's probably going to drop much, much more. When they do that type of action, it's because they are panicking, and we like panic.
Yeah.
Panic can be a good thing. Sam, I know we did a bunch of analysis today. Where can I drive people to? Do you have a blog? Do you got just your Twitter feed, which is Sam Evans Trader at Twitter?
At Sam Evans Trader, all one word, is the best place they can catch me. I go through spurts and up and down on there as well, but that's the best place to follow me. I put some of my picks, what I'm up to right now as well. Like I said, I'm taking a little kind of break from everything, but got a few things in the works, which you'll be the first person to know about. And but in the meantime, at Sam Evans Trader is going to be where that people can find me. So it'd be great if you get a few followers on there, and I'll keep everybody in the loop on what's going on there.
Sounds good, Sam. Well, thank you so much, and thank you for giving us a tour not only of your trading style, but your lovely superhero basement. I appreciate you being a superhero for us over the years. So thank you so much, and I look forward to having you on again soon.
I can't wait, man. Thanks for having me. Have a great day. Stay safe out there, okay?
You too.
Thanks,
take
everybody.
Care. Guys, that was Sam Evans, one of the master traders that's worked with us for many, many years. Obviously a superhero fan. If you guys would like to stay in touch with Sam, follow some of his tweets. He puts updates out there, different market commentary. He's at Sam Evans Trader on Twitter. Of course, we'll try to get him on here more regularly. I know that some of you really like the guy and enjoy his input and contributions, and as do I. Sam's been just one of the more straight shooters out there, doesn't candy coat things. I didn't curse today. I'm trying to encourage everybody to curse in the program. Why? Because we can nowadays. Although I do think on the YouTube page it says that this is supposed to be a clean show, so I guess we have to keep the showgirls out of the studio. All right, that will do it for today's show, everybody. I know I had a couple questions I didn't get a chance to get to. I do have, I guess, a rolling poll going right now, which is, what do you guys like better, the white charts or the black charts? I have actually, like right now, we're about half and half. For those of you who would like to see it, TJ, bring up this chart full screen, and you guys tell me which one you like better. I will make the change soon. These are the white charts. Some people said it's too bright. Here's the dark appearance, which I actually like, and some people said it's a little bit too hard to see. I'm indifferent because I'm here in the studio and they both look great to me. This is a little bit easier on the eyes. The unfortunate part is I have to go back and forth sometimes to different platforms, and this one is just a dark platform background. So let me know which one you guys like. I will be democratic, and whichever I get the most votes for, I will change it to either black or white charts. Until then, hopefully you guys enjoyed that session with Sam Evans. Go check him out. Add him on as a friend. If you like today's show as well, give us a little thumbs up and feel free to share. Send some comments in at tradermerlin.com. Tomorrow we have a very good guest. It's one of my favorites because he's a scarcity. He's a rarity in the market. We're going to have Bill Addis on the show tomorrow talking about interest rates. And of course, what we've been seeing recently is just going absolutely crazy. It's the catalyst for this massive uncertainty we're seeing in the markets, which for those of us who are shorter term, it's amazing. But let's try to make sense of it all from the big picture level with Bill Addis tomorrow. If you have questions for us, let us know what they are. Go to tradermerlin.com, send them on in, and I will see you guys on tomorrow's show. Take care.
The Trader Merlin Show is produced by Merlin Rothfeld, Gary Christmas, and TJ Writings. The show is engineered and edited by TJ Writings. For more information, visit tradermerlin.com.